Very good afternoon, all you wonderful traders out there. Welcome, all you beautiful ladies and you handsome gentlemen. Welcome to our daily live stream. This program is brought to you by DCFX Asia, and I'm yours truly, Abe Layman, coming live from the city of Semarang, Central Java, Indonesia. Right. So, how you guys doing? Good, I hope. Today is Friday, the end of the week, the 16th of June. All right. Mid-month of the mid-year. And past 2 days, it has been pretty busy, hectic with the three central banks issuing the rates. And that has made the volatility of the market super nice, fantastic. It goes up and down, and some of it move beyond reason. So, and for today, what we're gonna do is to round up what has happened for the past few days, for this whole week. All right. So let's take a look at the economic calendar to see what had happened. Let's say on Monday, it was a quiet day. It was pure technical trades. So on Tuesday, what do we have is the consumer price index of the US, and the numbers that came out for month on month, it was a 0.1% against an expected of 0.2. That's why it turns negative, because it's lesser than the actual is lesser than the forecast. And based on year, it's 4.0% compared to 4.1% expected. So less. And the core CPI based on month on month is stands at the same at 0.4%. Well, on Monday, did the dollar index went up? Well, we'll take a look later when we deal in the technical side of things. All right. So, next, what do we have? On Wednesday, the pound sterling has got the GDP announcement, and it is it issued a number of 0.2% as expected of 0.2%. No big deal. Pound sterling managed to hold that, but the manufacturing production month on month had a retard, meaning it went down to minus 0.3% from the expected number of minus 0.1%, which is bad. Industrial production also come out to a negative 0.3% compared to the expected number of negative 0.1. Then came the big news. Before the big news, the Fed of the US issued the core PPI. Month on month remains the same at 0.2%, but PPI in general had a negative reading of minus 0.3% compared to the expected number of simply minus 0.1%, which makes the dollar weaker. Then came the much anticipated data, which is the FOMC, Federal Open Market Committee economic projections, and then the issue of the statement or the minutes of meeting, then also the issue of Fed funds rate or the federal funds rate, which remains the same at 5.25%. Well, analysts and economists have been eyeing that situation because the past week, the Fed, especially Uncle Jay or Jerome Powell and his merry man, the Fed committee, has been dovish in their talk, and that made people assume, or made economists assume, that there is a pause in the rate hike. And true enough, there were no changes. The Fed is pretty happy Even though, if you remember, last week we have the initial unemployment claims that shot up pretty high and put a dent in the dollar index on that particular day. Then the inflation rate also not that good news. Then analysts are thinking that the Fed might change their mind, but it's not that simple that the Feds will change their mind once they set their minds in things. So they remain at the pause for Thursday, and they did give some hawkish talk, meaning they might want to go for another rate hike in July. And coming to the summer, they might want to go to the ceiling of 5.5% or maybe 5.75%. It depends on the progress that's happening between next week and week after next till the end of month. See if the fiscal policies on the macro level is working as planned and whether the inflation has really gone down because their target for inflation is at 2%. Currently, it's running at about 4.8%. Okay, so from the Federal Reserve came the ECB. Christine Lagarde did increase by another 25 basis points. The European Central Bank has big issues in their hands because Germany, their the eurozone's biggest industrial economy, the giant of the euro, uh, is in a technical recession. Okay, the Germans, not to worry about their economic situation. Okay, fine. It's a technical recession, meaning the growth has been slow. It's okay. Just keep on working get a new policies or whether get some fiscal policy moving and see if they can make changes and bring uh, the German's economy to grow bigger because it became a technical recession when the GDP shrunk from the previous reading. So because of that, technically, it is in a recession. And of course, the inflation rate for Germany is pretty high, the highest in fact, compared to France, Italy, Spain has got the smallest inflation rate. And because of that, um, the weight of the German economy in the Eurozone also makes the Eurozone going into technical recession. And that makes Christine Lagarde, the president of the ECB, go for a rate hike instead of towing the line like the Fed. The Fed did a pause, but ECB say, we're not going your way. We're going to rate hike because what the Fed had done is to increase the rate gradually to the point that the inflation numbers came down also gradually. And the last month was pretty drastic from about 6+%. Now it's about 4+%. I think now it's about 4%. So we'll take a look at that later. And ECB did have a rate hike, and there is a possibility that Christine Lagarde might want to increase it further. Next, the other central bank that issues the interest rate or the official rate is the Bank of Japan. Ueda-san is pretty happy with the current fiscal policies that is running the Japanese economy, and he is not going to rock the boat. So this morning, they issued the policy rate, which is at minus 0.1%. No changes. It has been that number for a couple of months already, if not a year. And they're pretty happy because the Japanese economy is a unique economy. It is the only country in the world that charges you service fee for depositing your money in the bank. So that is why they prefer to lend out money outside of Japan. That's why you have Japanese banks all over the world very happy to lend you money to start your business, to do projects. The Japanese banks are big, and why? Because they have loads of money, right? And the borrowing in the Japanese culture is taboo. Well, that's the culture. Anyway, so that was what's happening. The three central banks that have issued the interest rates for this month, and that will take us until the next month. And let's take a look at the economic numbers based on the heat map. Okay, here we are. Right. Trading economics heat map. United States, the biggest economy at the moment, running GDP at 23.3 trillion, current interest rate running at 5.25% against an inflation rate of 4%, with a jobless rate of 3.7% coming from a population of 334.23 million people. Not bad. Next is the Euro area or the Eurozone. GDP running at 14.5 trillion. Current interest rate has gone up to 4%. Inflation rate is at 6.1%, and the jobless rate at 6.5%, coming from a population of 342.9 million people. See, the euro area is a combination of European Union, the matured economy or developed nations, plus the former Soviet republics who wants to be part of the European Union, but their membership is not fully instated yet because the ECB is not too keen for the European Union to bring in members with weak economies. Why? Because a decade or maybe about 15 years ago, the turn of the millennium, Greece was part of the EU, and Greece had a economic debacle. The economy went belly up, the government went belly up, and because it was a member of the EU, ECB had little choice but to save them. So, lesson learned. That is why the European Union are not too keen to bring in the former Soviet republics unless they can prove that they have a macroeconomic policies in place that is stable, so that their weakness will not bring the whole of the EU down. That is a unique area, the Eurozone or the Euro area. And the other central bank, which is BOJ, Bank of Japan, Japan, the economy is running at 4.9 trillion, uh, with an interest rate of minus 0.1%, inflation rate of 3.5%, jobless rate of 2.6%, from a population of 125 million people. Japanese, uh, the uniqueness about the Japanese economy is that the Japanese culture is a spendthrift culture. So they would rather have their savings rather than spending. Well, that's how it is. All right. So those are the economic numbers of the three major currencies, which is the US dollar, the euro, as well as Japanese yen. And because of that, it shake it has shaken the markets this whole week, which is very interesting. Volatility is very great, it's very high. Okay, so uh let's share something that the central bankers did mention. Uh, Let's start with Christine Lagarde. So Lagarde pre-announces another ECB rate hike for July. See, she has increased. They have increased at 25 basis points the other day, and they promise that they'll go for another rate hike in July. Well, apparently they have or they agree to the policies of the Fed, meaning you to increase to decrease to bring down the inflation rate, you need to increase the interest rate. Well, apparently that works for the Fed and the US economy, and that is why the Fed interest rate is running at 5.25%, and inflation went down from a double digit to a single digit to now currently standing at 4%. So it has worked, right? And the Fed also wants to go for another rate hike because of what happened last week. Because the initial unemployment numbers was a shock, for them, and the CPI, Consumer Price Index, also does not warrant them to continue with the pause. So they are deciding to go for another rate hike. So Christine Lagarde is happy that they are going to do for a rate hike. They will toe the line of what the Fed has done by increasing the interest rate to bring down the inflation rate. Okay, so next, let's see what did Uncle Jay says. Okay, hawkish hold from the Fed offers maximum flexibility. Well, maybe, dovish action but hawkish talk. Yeah, they like to talk hawkish. They big, so they have to look strong. But actually, they're shy. They're pretty scared. They don't want to go into recession. They have to do something about their inflation. So, what they have done is to increase the rates, and this is the forecast that they have made. All right, uh, change in GDP. The forecast in June is at 1%. In March, it was forecasted at 0.4. So in the longer run, they will take about 2 years, 3 years to be able to be on par, and looks like the ceiling of the rate for the Feds or the US may be above 5.5. The ceiling was back then stands at 5.5. Possibly they want to go at 5.75. Will it go to 6%? Ah, it's anybody's guess. It all depends on the condition of the US economy in the coming months. All right, so it is closely watched because, like, whether we like it or not, the US dollar is the base currency for international trades, and also is the base currency for most of the OTC products that we trade. Right, so like it or not, we have to analyze, we have to monitor what the Fed is doing so that we can make informed decisions. All right. So, of course, they'll do a lot of drama. Find this really big, not just high. All right. So, it's like pushing and pulling, it's like playing your kite, you pull, then you release. That's what they're making trading and market movements dramatic. Maybe it's the trading maybe, I don't know. Well, run and let's get inflation focus metrics. Energy is going from 7 to less than 7. The rental, a place where you get a roof over your head, so down 8.2, maybe now is about 8.1%. Services X energy, X shelter has gone much lower, 6, now going down to as 4%. So which is good. So the numbers are looking good. So qualitative tightening are also looking good, and fundamentally the should be stronger. Okay, that's it. On the technical side of things, now we'll take a look at the technical side of things. Okay, let's take a look at the index. Where are you? Yeah, okay. Right. This is the dollar index, and it has been a set open for the dollar index. Why? Because it has gone down since Friday, Tuesday, Monday. Tuesday we had that negative numbers data. And Wednesday, uh, the the ECB came out with the rates and so drop and cover. Yesterday was dollar index dive. It went as high as 103 to as low as 102,048. That's about 140 points, 1,400 points, sorry. And yeah, about 1,300 points. And that is one of the biggest drops in recent times for the dollar index. So today, it is trying very hard to recover. Will it be able to do so? I have doubt. Pulling back is pretty normal, is pretty healthy. Will it go higher? Well, it can be a tricky thing because looking at H4 charts, uh, they may try to attempt to hit 102,889 because I see there is a weekly as well as a monthly channel crossing there. So it might pull back up to there. It won't be that strong because even if we have a spin top Gucci or spin top which is and then top and the hammer is below the 20 pp, pull back up to maybe the mid band of the 20 pp, which here, and this is also a one negative cycle of the low of May, the high and low of May, which is a 2.9. So this will be a tough resistance. It might hit there, but I have doubts. So just keep your eyes open, see what's the progress gonna be, and based on the hourly chart, can see the bears came from early yesterday, and it was dancing until the end of the day. This morning, the bears take a break, resting, and the crabs are in the market. Is moving sideways, very small range, from 102 to 10233 against 102,035. It's only about 300 points. Very small. So, uh, well, the Bears and the Bulls were in the market uh, this week. Today may be a resting day for the Bears and the Bulls. Maybe it's up to the Crabs to play. All right. So, that's the dollar index for you. And it is the basis for most of the other asset classes that we trade on. And I'm sure you guys would like to know what's happening to gold, right? And before that, let's say hello to our audience. Go Walker, hey, how you doing, Go Walker? Welcome back. Good afternoon. Good afternoon to you, sir. Why do the life outside? Once in a while, I like to have some fresh air. and I'm in a cafe in Semarang City. We are on the top level. Uh, I cannot move. I want to show you my surrounding is because there's mountains, there's paddy fields, it's very naturistic environment, and just to freshen up my mind a bit. Okay, why do the life outside? Yeah, well, see, the beauty about trading, you can do it anywhere as long as you have internet connection, you have your smartphone or you have your laptop. That's it. You are not confined to your cubicle or your own place, small space. No, it's fun to trade, to work outside once in a while. Okay, Mr. Pia, where are you, sir? Hey, Mr. Pia, welcome back. Where am I? Currently, I'm at Semarang City, Central Java. Okay, next, Smith JT. Hey, Smith, how you doing? Welcome back. I want to know how about gold, buy or sell. Okay, see, told you, gold is always popular, right? Let's take a look at gold. Oh, I have a short in sterling yen, and I think it's doing okay. So I leave it as it is. Let's talk about gold. Right. Now, when the dollar index is weak, gold will go the other way because it is it is traded on gold, right? Just remove the trade level so you can see clearly. Hey, hang on. Let me get rid of this show trade history. Sorry. Okay, that's it. Ah, now we have a better picture. So gold has been moving sideways since since the beginning of the month until the mid month. Why? Because the big boys are waiting to go and hit the market. Who are the big boys? Financial institutions, banks, hedge funds, uh, uh, institutions or traders with billions of dollars in their accounts. They are huge, right? So when they go in orders, they go in not about 100 orders, maybe about thousands of lots. So they can move the markets, and they are waiting for the right moment before pumping gold up. At the moment, they are pretty happy with maintaining gold at this level because technically, what we are seeing is the bogeyman is active and strong. Remember the bogeyman, the level 1962.80, right? Today, prices are running at the bogeyman, and above the bogeyman, we have a monthly Fibo, and then we have a yearly channel and a yearly channel cross. That makes things a bit tough to break, but you'll never know. Uh, it has been short ranging for gold for the past week. $37 yesterday was huge. Okay, that's pretty big. The rest of it is about $35. See, the average range for gold is about $30, $35. And today it has been trading only at a $10 range. So I expect gold to go above. Why? Because see, the trend ribbon is laying flat, right? But the distance between MA75 and the MA100 is not getting smaller, right? So that means that the bulls are still in the market and the bulls are still sleeping. The bears dare not come. The crabs are pushing the market bit to the side, right? But the bears, I have doubt if the bears will be here because what's happening if you look at the momentum line now wants to cut the mid band of 20 BB. When that happens, then the bullish momentum will be here then it will initiate a bullish trend. Based on the daily chart, let's take a look at the H4 chart. Right. So yesterday, the data from the ECB bring up gold prices. Uh, Gold prices does not get affected by BOJ's decision. After all, it's nothing new. It's like same shit, different day. But looking at the current candle, which is above the bogeyman. The bogeyman is at 1962.80. This is the yearly Fibo, right? And there is also MA 125. Now, when the candle opens above MA 125, which congregate at the bogeyman at 1962.80, this is a bullish signal, a continuation pattern that's going to happen. And by the way, this candle of Morobozu is right in the middle of the Bollinger Band. It covers the 15 BB and the 20 BB mid band. And these three candles are known as advancing soldiers. Am I blocking you? Let me check. Oh, okay. Sorry. My bad. Let's shift this a bit. So you can have clearer picture. Okay, better now? Yeah, better. All right. So the bullish Morubozu is a bullish continuation pattern. Now, what's happening is these three dojis or these three spin tops known as advancing soldiers, and we have a bullish candle again, a shorter Morobozu, covering all the three moving averages, covering the three trend ribbon, and this is a bullish continuation signal. Now, if we look at the top band of the 20 BB, it's already at 1971, right? If it's going to be a technical play, we can expect prices go further than that. Okay, so let's say today the range has been about $9, $10. The average trading range, daily average daily range is about $35. So we add another $25 and we can look at a target of 1991 or maybe at 1988. Remember the double auspicious number 88? That could be the target for today. And looking at what gold has been doing, there is still a possibility of the bulls coming back fast and strong. Okay, so uh, I need to see if there's any data coming. Just give me a moment. There's not much data coming today, and later it's just prelim UAM consumer sentiment, and not really a big numbers. So we don't expect that much. It's coming at 9 p.m. Well, what we'll do is we gonna see where gold is going, right? Okay. See, can we buy gold? Yes, we can. But let me look out for a good entry point. Then we can all make money together. Hang on. Wait. Oops. I get mixed up sometimes. Okay. So let's take a look at gold again. This is the H1. Now, if you want to buy now, it is very tricky. Why? Because it's at the top band of a 15 BB based on H1. And usually at the top band, they won't go poke way right up. They will go sideways for about 1 2 candles, maybe 1 2 hours, right? There is a potential of it going sideways for 2 3 candles, 2 3 hours before it goes up again, right? So, but if you look at the trend ribbon, right, this is a nice picture where the trend ribbon get compressed. After it compressed, it flipped. So from a bearish trend, it flipped to a bullish trend. Only then it is confirmation that the bulls are backing down. But if you look at the trend ribbon, the momentum line, see the momentum line, the MA10 is above the mid band of 15 BB and of course above the mid band of 20 BB. The momentum is bullish. Okay, so where is the good entry? I would say a good entry to buy gold will be around 1958 with your stop loss levels maybe as it can be as low as 54, right? And the targets, well, it can be 1988. Where is 1988? Here, right? I picked 1988 because 1988 is a 88 is auspicious number, right? Super lucky number. And and well, most cultures believe in that, and looking at that, and it's also within the range of the daily average, which is about $35 a day. So yeah, we are looking in that direction. I am bullish on gold, but I wouldn't want to enter now because the top band of the 20 BB is resisting the progress. Take a look at smaller time frame, M15. Okay, so M15 is telling us that the bulls are taking a break. So it might want to go sideways. Yes, the trend is still up. The momentum is also up. See, the trend ribbon last night from a bearish trend before the close of the day, it flipped and it is showing a gradual increment on the bullish side. So we can expect this bullish trend to continue, but the pullback may want to bring prices down to as low as 58. We can wait until as low as 55, then I might buy at 55. If it's at 58, then my SL level will be a pretty huge. I very stingy when it comes to stop loss, so um, that's how I trade. I prefer to wait to 1955 to be on the safe side, because if I enter at 1955, my stop loss may be up to 1952 or 51. $3, not so bad. $3 equals to $300. If I enter at 58, then I have to willing to take a $600 stop loss level. Too expensive lah. I prefer to wait. So even if I miss the trade today, I can always come back next week. All right. So well, uh, trade ideas for gold. For those of you who wants to know, wants are interested, I would say to buy around 1955. Your SL at 51. Your target can be at 88 or smaller target maybe at 78. All right, there you are. That's the goal for you, and I hope it has been useful. We have some ideas on how to trade gold today. Gold is bullish and very clear that the dollar index is pretty weak. The dollar is pretty weak, right? So who do you have next? Uh, Smith JT. Okay. Lisaya. Hi. Hi, Lisaya. Welcome back. So, Ms. Smith asked me again, what indicators you love using? Well, I have two sets of Bollinger Bands, uh, 15 BB and 20 BB. Then I have the momentum line, which is moving average 10. Then I have the trend ribbon, which is MA75. MA 100, and MA 125. All these are lagging indicators, right? I need leading indicators so that I can know not only the direction but the destination where the market can go, right? And for leading indicators, what I use is a customized Fibonacci, which I call it Abenacci. Google it. You can find out what the numbers there. You can also watch our previous videos on chart setups. If need be, then maybe we can have another lesson on that. But then next from the and Fibos, my Fibos, I have one Fibo for each time frame starting from yearly. All right, I have the yearly Fibo plus the Fibo channels for the yearly time frame, and then I have the monthly Fibo plus the channels as well. I have the weekly, and then I have the daily, right? For those of you who want to do swing trade or position trade, you don't need the daily Fibos because daily Fibos are useful for day traders like me or scalpers also like me. I like to scalp. I like to day trade. I don't like to swing because my margin not so big, very small. So there you are, Smith. That's what I use. Other than that, I've tried in the years. Over the years, I've tried almost all the indicators there are. I only use the current indicators. These indicators I've been using for about 2 decades, maybe more. Yeah, I've been trading about 35 years, but the last 20 years is these are the indicators that I trade on, and these are the indicators that I use to train traders as well. So it's to me it's the simplest and easiest to understand, and and when you update on a daily scale, you are also analyzing at the same time. Wonderful, isn't it? So next, go Walker. I'm waiting for price to reach that entry price so I can close. Okay, good for you, Go Walker. RL Pan. Hey, RL, welcome back. 1965 to 1970 is a sell zone. What do you do with that info is up to you. Okay, thank you. Thank you for the info, RL. So, guys, there's according to RL, there's 1965 and 1970 is a sell zone. Okay, is it? 65 to 70 is a sell zone. Yeah, 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 yeah. Possible. So, so I'm waiting for that to happen. You can buy, but I'm not I'm not keen to chase prices yet because it's a bit on the high side. I'll wait. All right. Thank you, RL. Thanks for the information. Next, who we have? Lisaya. If it goes to 1965, we see what the market does. If momentum loss, I'm looking for sell. Okay, possible. Well, of course, you see, nature works in a unique way. It doesn't go straight line from top to bottom. It doesn't go straight. It goes like that, curvy, curvy. You see, trees grow, don't go straight. Trees grow, sometimes the wind blows it a bit to the right, a bit to the left. That's how nature works. And the nature in the market are the humans, whether it is a institution, whether it is a large brokerage houses, whether it's a bank. At the end of the day, those the creatures or the object that submits the orders are humans. The traders are humans, just like you and me. That is the natural side of the markets. So we have to understand nature's law in order to have a clearer picture of what the market is doing. Okay, so when it goes up, there's always 3 step forward, 2 step back, right? So it's not going to be straight up. No, it goes up, then come down a bit, go up a bit, come down a bit. If you understand about Elliott wave, there is a correlation between Elliott wave and Fibonacci. Fibonacci is the dinosaur, I mean the historical mathematicians, right? Elliott wave is a quite modern mathematician. So Elliott wave and Fibonacci can combine it. You will see the correlation, and you will understand how nature works, and the role of 3 step forward, 2 step backward can be clearly seen. Okay, so lots of momentum, good for short market, to short the market. Yes, I agree with Isaiah. I agree with you. If it goes up, then it wants to pull back. You can do a short trade. You can scalp the pullback. $200-300, maybe $500 sometimes can be had from gold. All right. So nice, good idea, Isaiah. Thank you. Next, Smith JT will go up to 1970. So sellers ready to face loss, you may sell. Excuse me. Well, maybe you want to sell at 1970, yeah, why not? Right. Next, what do we have? Stiglitz. Yo, my man, welcome back. Hello, Mr. Abe. Hello. US oil. Thank you. Okay. Let's take a look at oil. Sure. Mr. Stiglitz like to know what the US oil is doing. Okay, we'll start with WTI, Western Texas Intermediate. All right. Well, I did mention that oil is ranging. Yes, it is going to increase. It is going bullish, but it is very gradual. But if you look at the momentum, yes, the bull momentum is in the market. If you look at the candles, this is a double bottom, and we have the bullish harami with a confirmation. Now the problem is it has reached the midpan of the 20 BB. Okay, so it may rest a while, but it may want to continue on Monday. So the bulls may be taking a break for today. Excuse me. Then Monday the bulls might come back and it may jump above. Well, oil has a habit of jumping over the weekend, right? So same thing with Brent. Um, what I'm looking at is a Brent has got more tendency of going bullish faster and further. Okay, so uh, support for Brent at the moment is at 74,565. The resistance, I should say, at 78,140. Well, today's Friday. It may close within the opening price. If prices close above 75.40 for Brent, be prepared for a jump Monday morning. Okay, that's my looking at the daily chart for Brent. Yes, oil is bullish. Okay, Brent, for Brent bullish. WTI, I'm looking at prices have to close above 70.25. If it closes below that, then it can be a tricky thing. But end of the day, if WTI closes above 70.25, 70.25, yes, it is going to be a bullish week next week, beginning from Monday. All right. I hope that answers the question. I hope that answers your request, Adrian. Okay. From oil, who else do we have? But gold still chilling, DXY rising. Okay, let's take a look at DXY dollar index. See if it's going to rise again. Uh, I have doubts. I have doubts of dollar index rising. See, why do I say that? Based on the H4, let me enlarge this. See, when I see candles like that, spin tops and a hammer below the bottom band, it is a strong bullish reversal, right? But as you can see, H4, one candle is 4 hours. So 1, 2, 3, 4. 16 hours it tried to reverse. into a bullish reversal, no can do. Why? Because the bulls are not in the market. What's in the market are the crabs. So it's going sideways, and there is a yearly FIBO number, a FIBO line, which is A2 at 102.330. It was tested only once, uh, one previous candle. This current candle will close in about 10 minutes. If it closes like that, there is a possibility that it's going further sideways because it only tested once and it closed much below that. See, the yearly FIBO and a monthly channel are the resistance. And you see, let me see if you can see the weekly cross. See, there is a weekly cross here, weekly channel cross. It's coming at the close of the day or the close of the week or when New York closes. If it goes sideways until there, uh, possibility that gold has got no resistance to go up, or gold might follow what the dollar index doing, going sideways. Why? Because this week has been a rocking and rolling week. So some traders make good money already before the weekend, or maybe today is their first. They are not in the market already. They have gone for a long weekend to enjoy the profits. So we can expect to have a quiet trading day today, especially after the Yanks open the market in about 2 hours time. All right. Uh, well, to say that the DXY rising, nah, I don't agree with you. Sorry. Okay, so it is a flat or side crabbish movements for dollar index. No clear sign that it's going up, and no clear sign that is going down. And because today is Friday, they have worked a lot since Tuesday, Wednesday, Thursday. Very hard workers. And today is Friday. I think they made enough trades. They want to take a break. Okay, so that's the dollar index for you, sir. Now let's take a look at what's happening to my order. Oh, Adrian say have a nice weekend. Okay, have a nice weekend. It'll be a wonderful weekend. Make it wonderful, guys. All right, let's take a look at sterling yen. See if my order is doing well or not. Okay, it's going sideways and currently about $100. Well, see, I just share with you why do I enter the market at that level. Okay, see, based on M5, this is plus A3 or one positive cycle, 50% retracement level. That is where I enter the market. Why I enter based on M5? Because earlier we had a dark cloud, then we had a shooting star, and you can see the top band are all closing together. So when prices cannot go above plus A3, that's when I decided to short, right? And it has looked it based on H1, it has gone to an overbought position. See, H1 also has a good sign, which is a spin top here, and that spin top is above the top band, right? So that is another reason or another trade setup that I use to enter the market based on H1. Now take a look at M15. There was a shooting star an hour before I entered the market. Then came another shooting star based on that M15. So that is where I entered the market, which is about 15 minutes before we go on air. And that is and now if we look at the momentum line, the bearish momentum has been issued. The trade setup, you see, the MA10 has crossed the mid band of 15 BB. Okay, so it is safe. But you may say, look at M5. There is a bullish momentum. Agree. But this candle is still running, right? And looking at M1 has got to pass, excuse me, the trend ribbon for it to go up. It may be difficult, but maybe not. So we just have to wait. I can wait. I got time. So let the order do the work. I will do adjustments accordingly when I see fit. All right. So we have come to the end of our program. And do we have any more questions? Nope. All right. So, right, ladies and gentlemen, thank you all for attending, and I hope it has been a good week for you guys. And looking forward to see you guys next week. And well, before you go, please, you my friend, give me some thumbs up on our channel, please, pretty please, with cherry on top. And all right, whatever you do, don't worry, be happy, stay healthy, please trade wisely. Have a great weekend ahead. I'll see you guys next week. Bye bye. God bless. Thank you. See ya.